I'll wait for some more people to join, and then we'll get started here. What up? Passed your first eval, congrats. Alright, let's get started here. We get enough people in here now. Starting with the ninth. Let me go into replay mode real quick. Oh, let's see. This 2-minute short closed below, right? Yeah, we did. Okay, so we sweep the high here. Balance the void, kinda, partially. And then we get this short to run these like lows inside the gap. So maybe that's our play? Or is there something better than that? No, not really. Okay, so this 2-minute short's gonna be the play. Something like that. That looks good to me. And we will say A plus short swept buy side. Very good momentum. Created OB on inverse. Obvious stacked below. Gap in series. What else? No macro. Good break even. So maybe this is like a scale plus break even, right? So we come down on this candle here, which taps the break even, and then we come back up. So looks like it would just be like a scale plus break even. Anything else? I think that's about it. Not really the most interesting trade, but a good pattern trade. Delivery is just a new week. Delivery is like the reaction to the high being swept inside the new week. Um, I forgot the name of the guy that I normally send the screenshots to post. Why can I not remember? I don't see him in my DMs. That's not good. Well, it's fine. Where can I find him? Oh, right here, problem. There we go. All right. Tuesday. I'll run 30-minute chart. All right. So Tuesday we get this reaction to the VPR to the left here. Pump at 930. I don't really like that though. It's just okay. This trade is just okay. I don't really like it that much. Is there like a better setup here? Maybe this long? Do we take this low on the left? Let's see. 892. 892.25. So we failed to take this low. But honestly, with this much momentum up, I'd probably still take this even without sweeping. So this would just be like an A setup. Or maybe A minus. But it's still pretty good. Like I would probably still take this unfunded, even though it's an A minus setup. This is the trade that Dodgy was like, oh, how are you gonna long with equal lows below or something, right? And then kind of like LR above. And then yeah, I think there was an S&P, right? So honestly, I think it's an A setup still. But me and Dodgy are going to disagree on this one probably, so he'll probably find a different setup to be like the best setup of the day. But I like the risk reward there. So maybe I'll just say it's A minus just for him. But just secretly know, guys, that this to me is an A setup. And then Wednesday. What did we have going on Wednesday? We had the what's this, the data wick here. Wasn't there like a good 30-second confirmation setup? Or the 1 minute from the bottom? Whichever. I like this long too, but I think that's a break even. So maybe we'll do the 30-second here since that didn't go break even. This long is very good as well. But yeah, we're gonna say this long here, I think. Since I think it's the only trade that didn't go break even. Unless there's something better here, so like a 5. No, I think that's it. Oh, the 2? Yeah, maybe we'll just do the 2-minute here. That's fine. So 2-minute long. This is going to be an A+ setup, even though it's technically like not the first inverse here. And the reason why is because of the data wick above. So this would kind of be the idea here. A+ setup. Singular gap. Good momentum. No break even. Delivery from the different gaps on left. Created CISD slash, yeah. Session heights above. Anything else? I don't think there's anything else missing from this trade. The shorts, if you look in the opposite side, were invalid, so that's about it. This 1 minute would have been a break even. 2 minute would have been invalid. So that's why we're paying attention to the longs there. All right, Thursday. Thursday was the best day of the week. It was a good one. Okay, so we're looking at the shorts on Thursday, probably. What are we saying this one here? This short. The long that Dodgy took I thought was just okay, but this short to me is A+. Yeah, the 1 minute. Use it to target Asia low, or maybe even, what was this, the new week or something? Maybe you target even lower, you target the 1 hour. That would be kind of crazy. I don't think anybody did that, but definitely a short to Asia low at least. What else? Oh, reaction to price retesting high it made was bearish. What else? No macro time. All right, cool. So that's that one. And then Friday, we had this 1 minute long, or we had the shorts after. Basically the 10 a.m. reversal. I took the shorts on Friday, the 5 minute. I thought that was really good. So I'm probably going to be more biased towards that, but I also like the 1 minute long, and they're both good. I just think the 5 minutes a better example because I can I can mark out the move all the way down to London low, and that's like 300 points. So that's probably what I'll do. But yeah, this short was nice. Break even on the 5 minutes here. So about a 70-point move, but I'd probably just go break even when we rehit this low. All right, A plus 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 short. Singular gap. 10 a.m. reversal. Delivery from 1 hour. Higher time frame sell model. What else about this trade? Macro. Good momentum. Good break even. Good RR. Swept buy side. Premium. Anything else? I think that's it. Yeah, it's a very good short. This is what every single one of your trades should look like, guys. All right, so those are all the trades. Now I can kind of go back through and answer some questions. Monday's trade was this. Okay, it was the short on the 2 minute. Targeting, I guess, like this first low here, and then scale, and then we break even there. So scale plus break even trade. The long was good, but the short was even better. You don't need to wait for the 15 there because the 5 minute tells you enough of the story. But if you want to take the 15 also, the 15 is A plus as well. See, look, the indicator even lights up. So yeah, if you want to take the 5 or the 15 minute, it really doesn't matter. I think even like they close at the same time potentially. It looks like they do, right? 686. Oh, I guess they don't close at the same time. It looks like it happens 10 minutes later. My apologies, but still, like it looks very good. I would still take this even without the 15-minute close there because you have to remember too. We're considering like the reaction to the liquidity here. We're considering the fact that we're rejecting off the 1 hour. We also have to consider that this 15-minute gap isn't that significant, right? Because it never delivered price to a higher high. If you can't figure that out, then that you don't always need to figure out where the draw on liquidity is, like where buy side and sell side are. If you can't figure it out, just stop trading. That usually means we're in an accumulation phase, and you'll know where buy side and sell side are usually. Like it's very easy to tell. The break even at the long yesterday wasn't high resistant. Which long? This one here? No, this isn't high resistant. It's just an ITH. If it was external maybe, but no. And the other reason why is because we hadn't tapped into that unfilled 1 hour yet. We left like relative equal highs, so no, I wouldn't be too worried about that. How did you know the draw? I didn't know it. I didn't know it until price disrespected 50% of this up move. So when we mark out the fib here, okay, all we expect out of the 5 minute inverse is for price to run to this low. And then when we start to displace past it, that's when you know, okay, we're really bearish. We could complete the sell side of the curve here. Okay. No, Dan, it's not. Yeah, I'll post the recording. So what is a high resistant high? No, you're good. A high resistant high is whenever we take out like major buy side or sell side. Okay, so like, is this major buy side or sell side? Right? Not really. And the buy side and sell side we take out usually has to be inside of a gap. Is this high that we take out inside of a gap? Not really, right? So this is just like accumulation, right? Now, if price were to come up and we create this high and we take out all these highs to the left and we form this high inside of a gap and then we come up and remanipulate the high and then reject, that high would then become high resistant. Does that make sense? Like here, potentially, if there's a gap to the left, like a bullish gap, which maybe there is, I don't know. Okay, wait, this low. This low right here is high resistant. Okay? Because it's this low inside of a gap to the left, and it's external. And we run the low. And you can see here on the second attempt down, do you see how we fail to run this low? That's like the key moment when you know that price is high resistant. And then the beauty of this trade is that when you know that this low is high resistant and you see price fail to re-hit the low there and kind of come off like what I imagine to be a rejection block, you can then look for longs after that, right? To then, use almost like the high resistant low as a confluence to aim higher. Okay? Which time frame do you look to determine buy side or sell side? Usually like higher time frame, 15-minute, 1 hour, 4 hour. We'll make it not high resistant if we run out buy side. So when price retakes this high here, right, that we put in, the low is no longer high resistant. Much in the same way that when price runs this high here, okay, this makes this high high resistant until we take out sell side again, which when we run sell side here, this high can now be reswept, which you can see on this swing we do, okay? Little crash course on protected highs and lows, high resistant highs and lows. Took this long in 924 before the V shape. Gap isn't obvious enough would be the only thing I'd say. But that should have been a break-even trade. When you resweep that second, or that ITH you just put in, and get that very bearish reaction, you don't want to see that happen. So that would just be a break-even. There's not really anything wrong with it. It's just the second setup is obviously better. High resistant is not the exact same as protected high because protected high is like the pattern, whereas high resistant is just like the description. So protected high is like, okay, we have a high inside of our fair value gap that was swept and we left a wick and then we come back. Like technically if we come back here to that example I was showing, like that wick low, wherever it's at, that wick low is technically not protected because I believe we closed through the low. So to me it would just be high resistant, right? So like if you look here, right, we have this wick. In a normal protected low scenario, there shouldn't be any break of structure here, that we shouldn't close through the low. But because we do, it's technically not a protected low. If we go to a different time frame, maybe, okay, like the 5 minute. Okay, so the 5 minute, this would be a protected low, right? But the 1 minute, it's not. So that's the difference, right? If it follows the pattern, it's a protected low. If it doesn't follow the pattern, but it like looks like it could be a protected low, then it's most likely just high resistant. Okay. Can I explain the Friday shorts? I kind of already did, so if you want to go back and look at that in the recording, you can. But essentially, the gist is okay. Very bearish reaction, singular gap, good momentum, reacting from the higher time frame gap to the left, singular inverse V shape, 5 minute. Yeah, for sure, Hannibal. Will the recording be uploaded to my YouTube channel? I'll post it in the doc as well. How's this month been for you? I made over 10 grand this week, so it's been pretty good so far. Do I use breakaway gaps? No, I think they're hindsight. Yeah, most of the time Armani. So the way that we expect price to deliver is usually price takes in external, retraces, then retraces to internal. Price takes liquidity, balances inefficiency. Okay? This is the way that price usually moves in like a normal, efficient, good price action market. And vice versa, right? If we balance an inefficiency, we expect price to take liquidity. If we take external, we expect price to come back to internal. IRL to ERL. You know? So that's where like this idea of like protected high and low, okay, comes from. Because this is the way the market moves, because the goal of the market is to move as efficiently as possible. It price will gravitate. Dude, my W key isn't working. Will gravitate towards wherever price has leftover orders or inefficient. Inefficient delivery. Goodness. Okay. Too much everything, APOF. Too much everything. On Friday we didn't go to 50% for the long at open, and we left a 1 hour unmitigated. Yeah, like I said, I don't like the long as much. I think it's just okay. The reason why I think they took it though is because of the equal highs. Equal highs allow you to kind of get away with taking worse setups. Right, these were the equal highs. To me, these aren't the best equal highs, but they are equal highs that line up with the for value gap. You can see there, this tiny one. Well, actually, no, they're relative equal. Yeah, honestly, I don't think this setup is that good. I think it's like an A minus setup. It's just okay. Do I only trade afternoon / PM? No, I trade both. Did I care about the 1 hour unmitigated? Eh, kinda. Not really. I didn't really think anything of it in the moment. I didn't really get married to these things if like we're balancing like a higher time frame PDRA and a different time frame, which here we hit the 30 minute, I think it was, or there was like a higher 1 hour. So like whenever like you're like, oh, we have to balance the inefficiency there, the obvious 1 hour, okay? What you do is you combine all of these fair value gaps in the swing, right? You have a 1 hour here, 1 hour here, 1 hour here, 1 hour here, okay? And you can combine them all into basically one fair value gap in your head. When price comes back and even zaps into that first fair value gap and reacts off it, this is technically efficiently traded at this point, right? Kind of talking about this again. We want to balance it in inefficiency and then go take liquidity. So when this is balanced on that first 1 hour, you can look at this like an iFVG, and so you don't need to get married to this 1 hour gap here. Does that make sense? Same example here, right? We have this 1 hour, we have this 1 hour. You can combine all these into one gap. When this gap gets balanced, we expect price to go take liquidity. We do, and then we come back, right? What draws take priority for you? Data wicks, equal highs and lows, LR, unfilled inefficiencies on the higher time frame. External liquidity, usually session highs and lows. iFVG, institutional order flow entry drill. It's just like it's an easier way to say like when the price wicks into a fair value gap and responds aggressively. How many points to qualify as an iFVG? Usually 4 at the minimum, but we try and take like whatever is visually obvious. If there were a lower time frame perfect equal lows, would you long if bias is bullish? No, because that's conflicting draws. It depends. Like if the lows are at swing lows, absolutely not. If they're like inside the range, maybe. But no, if they're perfect swing low equal lows, no. No, I couldn't do that. Okay, that's the only exception if there's a data high. If there's a data high, yes. But I think those equal lows aren't that good that you're talking about. So yeah, that's like the only exception. I should have said that. Because data wicks trump everything. Equal lows, equal highs, everything. Okay. All right. I think that's gonna be it for me here, guys. If I sat here all day, I'm sure I could keep answering questions and we could be here for hours. So I'll catch y'all Monday. If you guys got more questions, just throw them in chat. I'll get around to them eventually. Enjoy your weekend. I'll get the video uploaded in a timely manner this weekend. Obviously last week I was all over the place, but this week we'll get it done. So I will catch y'all on Monday, 9:30 for market open. Y'all have a good one. Peace out.